Hey guys, this is Saul with My Fi Journey. It is Saturday, May 29th, 2021, and I'm still on track to be financially independent by December of 2026. I wanted to do this follow-up video to my video from yesterday where I explained or I told you guys what I was investing in. I got a couple of feedback from a couple of the viewers where they said, they wanted to see the actual data or the stock tickers on the page and not me just talking about them. So here's what I'm going to do. I'm going to show you the stocks that I have or the ETFs that I'm investing in. I'm not going to show any actual amounts, but I will be showing you the percentage that I'm allocating to each of those units. And I'm going to tell you what my plan is for the future. And what I'm going to be doing is I'm going to be doing an update probably about every month. I'm going to try to do it the last Saturday of every month. So this is the first of those videos that I'm going to be doing. So every month I'll basically give you a progress of how things are going. And it's all going to be about with percentages. I'm not going to give out like actual amounts that I'm having because this is really about how good it's performing, now how much money there is. So without any further ado, here we go. So the reason that I have them sorted this way, obviously it's not alphabetical. It's because this is how I have it. This is how I started investing in those units. So I first started, the first one was from the one from the top, MLPA, and then I started working my way down as far as, what I started buying. So this is the list of the majority of where my money is. If you can see, this all accounts for 97.78% of my total brokerage account investments. There is, yes, 2.22% that is distributed among others, but those are basically just one share here, two shares there. So it's not really making that big of an impact. So let's go through the list. So the first one is MLPA. That's a MLP. That's the Global X MLP. This one, when I purchased it, the yield that it was giving was about 13% of dividend yield. The price has gone up, so therefore the yield has come down. They did reduce their dividends a little bit ago, but I think it was like maybe like 5 cents per share that it went down. So it wasn't that big of a difference. I think when they made that change, this was giving a dividend yield of close to 9%, and they went down to 8.3. So it wasn't really a big deal. MLPA is currently comprising the 38.29% of my whole allocation. So basically, 38% of my money, invested money, is in MLPA. Right now, as of yesterday, Friday, May 28th, it was paying out 8.33%. And since I bought it, and I bought this actually, I think the first units I bought were back in April of 2020. So it's been a little bit over a year. And since then, the total allocation, basically, from what I purchase, if you go in and look at the cost basis for the purchases and compare it to the current price, it's gained a total of 21.87%. Now, through the year, basically any dividends I've been reinvesting, I started reinvesting in itself. So basically, when I had MLPA, I had the dividends that MLPA generated go ahead and get reinvested in MLPA. I don't do that anymore, and I'll tell you what I'm doing, once we go through the list. The second list is STWD. This is Starwood Property Trust. This is a REIT, real estate investment trust. Um, it's actually funny because I didn't know about STWD. I learned about it because somebody at my work mentioned it, and that's when I started looking at it. This one also, I bought it back in April of 2020, and I think the when I bought it, I think it was also giving about 12% of dividend yield, and you can see now it's actually the yield is down 7.64%, but that's because the price has gone up a lot. If you can see, I basically gain, if I were to sell all my units or sell all my units, I would be making a profit of 25.55%, which I'm not going to do because it keeps growing and it keeps paying dividends, and it's still a good amount. I mean, the amount of money that I put in, it's still giving me a fair good amount of dividends per quarter. That's one thing I wanted you to know. MLPA and STWD both pay dividends quarterly. Everything else, I believe everything else pays dividends monthly. So that's why I'm investing in those next. So once I started making dividends from MLPA and STWD, I started looking around and see what else is out there. And that's when I started, that's when I found QYLD at a dividend yield of about 12%. And then the other nice thing is QYLD pays dividends every month. So compound interest, right? If you get the money every month, you get to reinvest it per month, and therefore that month it's generating additional dividends. QYLD right now is paying 11.94%. And I'm actually down. I just started buying QYLD this year. I think February, maybe February or March is when I started buying. Since I bought it, it's right now down 2%, but that's okay because with their dividend yield at 11.94, and they paid it monthly, it's kind of like getting paid 1% every month. So in 2 months, I'll basically recoup what it's down right now, and it keeps paying every month. The next one is CLM. Now, I typically only buy ETFs and some REITs. I don't really understand funds. CLM is a fund, it's a closed-end fund. It's the corner store strat value fund. I, I just, even though I'm trying to be conscious, I actually just went with the hype and it was paying really good dividends. And I said, okay, let's just put some money in there. Um, it does pay good dividends. The nice thing about CLM is, unlike everything else, they've actually told you what they're going to pay for dividends from now till September. So you already know how much dividends you're going to get between now and September from CLM. The problem is, since I bought CLM, it's actually gone down quite significantly, and I'm down 20%, close to 20% on CLM. So, you know, I'm definitely not going to sell those because they are paying pretty good dividends, but I'm not going to buy any more of it either. So I'm just going to let that ride and just look at the dividends. Again, I'm not investing to make profit in a month or a year. I'm basically investing to start gaining dividends. So the next one is Orchid Island Capital, that's ORC. That one actually is pretty low as far as the weight in my portfolio right now. It's only basically making up 6.45%, but it's right now paying 14.26% in dividends, and they pay them monthly. So I made a little bit of gain, like the price has gone up a little bit, but that's not enough, or not really, considerable. So here's where I'm at right now. Like, and this is basically where everything is, right? That's the majority. Everything else you see, it's less than 1%. And I wanted to show you this because this is what I'm planning on doing. I'm trying to basically get everything um, similar, like the same percentage, the same amount of money in all of my holdings, but I'm going through it as looking at it and starting to invest on the ones that are giving me the highest yields right now. So my plan right now is to kind of get at the same level as I have for, say, QYLD as far as percentages, and start investing like all the dividends that MLPA give me, that STWD, that QYLD, and that CLM pay. I'm reinvesting or putting that money into more ORC shares. And then once the ORC shares start to get a little bit, higher as far as the percentage of my portfolio, then I'm going to move on to the next one. And right now I have the table that shows all the dividend yields that the other units pay. But what I'm going to do is I'm going to start with ORC. Once I get ORC to about 20% of my portfolio, then I'll move on to RYLD because that's giving or paying right now 11.9%. Now that's the plan today. If in a month, or whenever I get ORC to 20%, maybe this shuffles a little bit, then I'll start putting the money in whatever's paying the highest dividend of the units that I still don't have significant amount invested in. So right now, basically the plan is, start dumping anything that MLPA, STWD, QYLD, and CLM pay, and buy more ORC, buy more ORC shares. Once I get, a little bit more distributed portfolio, then I'll move on to the next one. So that is what I'm looking at right now. That's where I'm at. If you see, this is not the average. This is the weighted um, dividend yield. So based on the amounts that I have for MLPA, how much it pays, how much I have in ORC, for example, and how much it pays, overall, I'm getting about 10.6% in dividend yield, and that is pretty much that's per year. So it's just under 1% a month that I'm getting in dividend payments. And then if you look at the current appreciation, basically, how much money I put in, and if I were to sell everything, how much I would make or lose, I would actually make 9.72%. And that's primarily because, these two have gained quite a lot, but CLM also dropped, quite a lot. So overall, I'm 9.72% of capital appreciation, which I really don't care because I'm not selling anything. I'm not planning on selling everything. I'm planning on basically living off the dividends whenever I decide to stop working. And right now, the dividends that I'm getting is 10.6%. So as I start investing more in the units that pay higher dividend yields, this number is just going to keep going up. Eventually, probably I'll start once this become long-term holdings, I'll probably sell some of those units because right now they're paying, I mean, it's still good dividend yield, but it's definitely not as good as a 14.26% from ORC. So once I can start selling some MLPA units, I'll probably move that money around and sell some units, not completely liquidate them, but just buy maybe ORC or RYLD and start getting some higher dividend yields, right? Like, over 10 instead of below 9. So let me know if you have any questions or any comments. I do have some other units. I have some of the aristocrats, dividend aristocrats, like Coca-Cola, um, IBM, or the Realty, the O ticker. But those are my long term. So once I make enough dividends to cover my essentials, which is housing, utilities, and food, once I can make enough money out of dividends per month to cover those expenses, any extra I'm going to start using to buy, the Coca-Colas, the Realties, and the IBMs and those type of companies that don't pay as high dividends, but they're not as risky as the ones that you see in the screen right now. So let me know if you have any questions. If you like this video, please give it a thumbs up. That's going to help other viewers get that video in their feed. And also please subscribe so that whenever I post a new video, you get the information in YouTube and you get alerted. Let me know if you have any questions. Leave any comments. See you guys next time. Thank you.